Is Bitcoin set to fall below $60,000? An intriguing question indeed. In today's discussion, we'll delve into the recent CPI report and its potential impact on Bitcoin. Let's start with the basics. The Consumer Price Index, or CPI, is a measure of the average change over time in the prices paid by urban consumers for a market basket of consumer goods and services. It's a significant economic indicator, often used to identify periods of inflation or deflation. Now let's move on to the recent March CPI report. It revealed a 3.5% inflation rate, a figure that has sparked much debate, particularly concerning the potential for Federal Reserve rate cuts. This level of inflation is significant, with major banks predicting even higher levels, ranging from 3.3% to 3.5%. Such estimates have widespread implications, not just for traditional markets, but also for the cryptocurrency world, notably Bitcoin. Speaking of Bitcoin, let's take a brief look at its current market status. Bitcoin, the world's first and most famous cryptocurrency, has been facing a few challenges lately, including a strong US dollar, high treasury yields, and regulatory tightening. These factors have put a damper on its rally, and with the recent CPI report, there's speculation about potential difficulties for Bitcoin to reach the $100,000 mark. The interplay between the CPI and Bitcoin can be a complex one. It's not just about numbers and percentages, it's about market sentiment, investor behavior, and global economic trends. So let's take a closer look at how the recent CPI report could impact Bitcoin. Bitcoin, although a powerhouse in the crypto market, is not without its challenges. Let's explore how a strong US dollar, treasury yields, and regulatory tightening could impact its rally. First, let's delve into the influence of the US dollar. Bitcoin, like many other global assets, has an inverse relationship with the greenback. This means that when the dollar strengthens, Bitcoin's value tends to drop. A stronger dollar can make Bitcoin, which is priced in dollars, more expensive for investors using other currencies. This could potentially lead to a decrease in demand and a subsequent drop in Bitcoin's price. Next, we have treasury yields. These are the returns on investment for US government debt and are often viewed as a risk-free rate of return. When treasury yields rise, it can put pressure on assets like Bitcoin. This is because higher yields can make risk-free bonds more attractive relative to riskier assets, potentially driving investors away from Bitcoin and towards bonds. Lastly, we come to regulatory tightening. As Bitcoin and other cryptocurrencies have grown in popularity, they've also drawn more attention from regulators worldwide. Increased regulation can create uncertainty in the market, and this uncertainty can lead to price volatility. Moreover, strict regulations could potentially limit trading or make it more difficult, impacting Bitcoin's liquidity and attractiveness to investors. These challenges certainly have the potential to shake Bitcoin's position. But how exactly does this tie in with the recent CPI report? Let's find out. Predictions and market trends often play a significant role in the crypto world. Let's examine the predictions around Bitcoin in light of the recent Consumer Price Index, or CPI report. Major banks are at the forefront of these predictions, forecasting elevated inflation levels. These estimates range from 3.3 to 3.5%. It's a significant figure, one that could potentially put a damper on Bitcoin's rally. Experts in the field echo similar sentiments. They foresee potential difficulties for Bitcoin to reach the much-anticipated $100,000 mark due to this higher inflation. It's a significant milestone, one that many crypto enthusiasts have been eagerly awaiting. But with the inflation rate on an upward trajectory, this goal may be further out of reach than initially thought. But what about the here and now? How has Bitcoin fared in the face of these predictions? Real-time changes in Bitcoin prices tell a compelling story. The crypto giant has seen a price drop to $68,200, and open interest, a key indicator of market activity, has shown a decline in the past 24 hours. It's a reality that has left many surprised and perhaps a bit concerned. But let's not forget, volatility is the name of the game in the world of cryptocurrencies. These fluctuations, while significant, are not uncommon. Remember, these are predictions, not certainties. They are based on current data and trends, but the crypto market has a knack for defying expectations. While predictions can give us a glimpse into the future, Only time will tell the true impact of the CPI report on Bitcoin. Stay tuned for more updates in the crypto world.